Partner companies backed by Ripple just raised more than $1 billion to buy XRP on the open market. This has huge effects because you'll understand why XRP could soon become one of the world's most valuable assets once you know who's behind it all and what they're up to. This is not advice about money. What's going on now has the potential to change the whole world of banking. We're talking about Evernorth, a brand new company with ties to Ripple that just announced its plan to get more institutions to use XRP. Ashish Birla, the CEO, just stated that they are launching Evernorth XRP, a full institutional vehicle designed to fuel the XRP ecosystem. This is the same Ashish Birla who helped Ripple make on-demand liquidity a global product. And this isn't a beginning show. As part of this billion-dollar investment, Ripple, SBI Holdings, Kraken, and even XRP co-founder Chris Larsen put money into the deal. They're not just getting money to make tools either. It's very clear in their official news release. The money will be used to buy XRP on the open market and build one of the biggest institutional XRP stockpiles ever. If you really want to know how these kinds of moves by institutions can become events that leave generations rich, the XRP Millionaire Blueprint has everything you need to know. It's a full strategy package with an in-depth paper, an infographic, and an exclusive video breakdown that shows how the top 1% are positioning themselves right now. It's in the message that's been pinned below this video. Now let's talk about what Evernorth is doing and why this could be one of the biggest changes in power since Ripple Labs began. This means the following. There is now open competition among institutions to get XRP before it runs out. With Evernorth's billion-dollar round and Ripple's own buyback plan from last week, a total of about $2 billion has been committed to directly buying XRP. And since the amount of money in circulation is already getting tighter, this is going to put a huge strain on the supply that is available. Ashish Birla said that Evernorth is a bank-grade platform that connects traditional finance with DeFi built on XRP. He said that XRP is ready to be used, and Evernorth is designed to be ready for that moment. That's right, they're not waiting for things to get better. All of this is being built around XRP right now. This is how it's put together. Armada Acquisition Corp, a public SPAC on NASDAQ, and Evernorth are merging. When the deal is done, the new company will trade under the symbol XRPN. This means that Evernorth will not only be a Ripple partner working in the background, but also a public company with a clear link to the XRP infrastructure. The people who have invested in them are also not small players. They are RippleWorks, SBI Holdings, Kraken, Panta Capital, and GSR. They are all very involved with global payments and the flow of digital assets. The way they say their news is very important. The money will be used to buy XRP on the open market so that the world's largest business XRP Treasury can be built. Take that in. They don't want ETFs or futures right now. There is no hiding where they are going with this. Now think about how to get it. The overall amount of XRP in circulation is about 55 billion, but about half of that is locked up in Ripple's monthly escrow releases. A lot of what's left is controlled by retail and long-term users. A very small amount of XRP is in open float on exchanges, and the liquidity pools for institutional products are even smaller. As a result, supply pressure will go through the roof if companies start to pile up at this rate. For sure, that's what we're seeing. Ripple's $1 billion treasury effort and Evernorth's $1 billion buyback fund are two examples. Behind the scenes, there may be several more institutional vehicles in the works. When these groups start to compete for funding, the price discovery process for XRP could happen much faster than anyone thinks. You can't just guess about this either. We can see where this is going by looking at Evernorth's own plan. They are going to put money into validator involvement and running XRP ledger validators to make the network more decentralized and secure. They are also going to use Ripple's RLUSD stablecoin as a way to get into on-chain finance. Market growth, adding cash to platforms for tokenized assets, institutional loans, and settlements across borders are all things that this technology can help with. In each of these categories, XRP's transaction volume and use case go up immediately. Now comes the crazy part. More people want to use the network because of every validator, DeFi liquidity pool, and treasury account built with XRP. That's why this is important. They're not making predictions, they're making things useful. Some people will say that this makes power more concentrated, but if you look more closely, it might be the opposite. Control over the validator system doesn't get stronger when Ripple, SBI, and other third-party investors are involved. There is more protection and resilience when there are more validators. It's what makes real independence work, but it's not the most important part. As a result of this project, Ripple and its partners now have a public market tool they can use to move and store XRP liquidity. For banks, funds, and corporations, this means they can now use XRP-based reserves without going through an exchange. Through Evernorth, they can settle, borrow, lend, and do business immediately on the XRPL. Now things really start to get interesting because when systems built for institutions start to work with DeFi rails, it completely bridges the gap between crypto and traditional banking. It's the building blocks for a new banking standard, and Ripple has been hard at work on it for years. Chris Larson, one of the founders of Ripple, even got involved in this one. He stated that he put 50 million XRP from his own account into the Evernorth fund. That makes it clear that he sees this as an establishment play over the long term, not a short-term pop. We're happy to work with Ashish and the Evernorth XRP team to improve institutional lending, liquidity provisioning, and DeFi yield opportunities for XRP, as Brad Garlinghouse himself said. To sum up, Ripple and Evernorth are working together to make XRP's liquidity more widespread. These are the parts that make up the big scene. If Ripple and its ecosystem partners keep building these institutional vehicles, and each putting billions of dollars worth of XRP into them, we won't just be watching a price setup. We'll be seeing the start of a global liquidity network. Tokenized assets, stablecoins, and real-world towns will all be able to move value between them with this layer. Yes, that is exactly what Ripple said they wanted to do years ago. This time, though, it's happening through public companies and relationships between businesses. This is the reason why a lot of experts like Jay Claver think prices will change a lot in the next few years. Claver said in a recent interview that XRP could reach $10 to $50 in the near future if all the right conditions are met. These include ETF approvals, Treasury integrations, and tokenized swaps. As tokenization grows, XRP could then reach 3 or 4 digits between 2025 and 2027. Is that possible? It's not crazy, according to the math. The potential value of tokenizing derivatives alone is over $1 quadrillion. Getting even a small part of that through XRP-based payment could make demand go through the roof. And if Visa's new report is right and Ripple's RLUSD becomes the most popular stablecoin for DeFi liquidity, then XRP will be the main asset used for settlement in tokenized capital markets. Think about what that means now. Treasury was just bought, Ripple has ties with hundreds of financial institutions, and Evernote's billion-dollar buyback is now live. There is no longer any growth in this network. It's turning on. That's the reason why everyone is paying attention now. The best chances come up when institutions start to buy before most people do. That's what we're seeing with XRP right now. What does this mean for XRP now? The market structure started to change a lot as soon as Evernote started its billion-dollar project. XRP is being bought by more than one company. It has to do with how it affects liquidity, network adoption, and the situation of institutions. Take a look. There is a fixed amount of XRP in circulation. Exchanges only hold a small part of the total stock. Ripple's escrow can only release $1 billion a month, and most retail users don't use their coins for a long time or at all. When institutions buy back stocks for billions of dollars, the market starts to get tighter around the edges. Evernote isn't just buying to get more. They are making a bank model that will serve as a central hub for institutions' cash flow. This treasure chest won't do nothing. As it comes in, it will actively provide landing liquidity, collateral for DeFi protocols, and working XRP for big payments. That means XRP is now useful and in high demand in a way that hasn't been seen before on this scale. Every XRP that goes into Evernote's treasury is taken out of trading routes that are easy to use, making them scarce in real time. And the effects on institutions are very big. Take the fact that Ripple bought Treasury. Ripple and Treasury now offer 24 hours a day, 7 days a week liquidity optimization, real-time settlement, and the ability to send money across borders for businesses and financial institutions. And this turns XRP from a digital asset mostly used for sending money to other people into a fully functional currency for the government and for payment. Business can now keep XRP as a liquidity reserve just like they do with cash or stocks. The only difference is that XRP can be settled instantly and companies can use decentralized financial infrastructure. The size of this is crazy. Around $145 trillion worth of company treasuries moved around the world last year. Even if just a small portion of that flow went through XRP-based settlement networks, it would be much bigger than any other use case the market has seen. And Evernote is presenting itself as the tool that makes this kind of adoption easier. Their plan includes growing the market, taking part in projects that use tokenized assets, and providing DeFi yields. This means that XRP will be used as both a layer of collateral and active payment infrastructure. Another important part is the involvement of the validators. People who don't like XRP say that the ledger isn't decentralized enough because Ripple has previously had power over validators. The way Evernote is set up could actually make decentralization stronger by adding institutional-grade validators that work on their own and make the system safer. With more validators, the network will be more resilient, handle more transactions, and give institutional users more trust, which is important for Treasury operations that need to know how the network will work. Then there's RLSD, which is Ripple's stablecoin, and a way to get to DeFi, which is based on XRP. Visa's most recent study named RLSD as one of the best stablecoins for tokenizing traditional assets. Institutions are starting to see that RLSD can be used for more than just payments. It can also be used to unlock collateral pools, tokenize real-world assets, and create possibilities for on-chain yield generation. As for the tokenization market itself, it went from $5 billion in December 2023 to over $12.7 billion now, and some think it could hit $1.4 trillion by 2030. Because XRP is used as the base settlement asset in most institutional use cases, this growth is good for the coin. Take a look at it this way. As more dollars move into stablecoin-backed loans or tokenized assets, more XRP is needed to settle the deal, serve as collateral, or support the transaction. As more people use XRP, it's no longer just a speculative currency. It turns into an important part of the banking system. When utility meets institutional size, markets start pricing in real value instead of short-term sentiment. This is when markets have always done this. Now add the public transportation part. Because Evernorth is listed on NASDAQ through SPAC with the ticker XRPN, institutions can use the XRP system without having to buy XRP on exchanges. For the most part, the Treasury is just a stand-in for the public financial markets. That's a huge step forward because it makes it easier for businesses to adopt. Companies can use XRP-based Treasury techniques to get yield, collateralize their assets, and gain exposure to these things without actually owning volatile assets. This is the coming together of old-fashioned financial systems with new digital standards, and it's already happening. Let's go over supply dynamics again, because this is where the market mechanics get really interesting. The total number of XRP tokens in circulation is about 55 billion, but only a small part of that is truly liquid. About 1 billion XRP are released every month by Ripple's trust. People who own coins often don't use them for years, and dealers don't have a lot of coins available. Now picture several big treasuries, each with billions of dollars, buying XRP and securing it for use in their operations. All of a sudden, the quantity that can be used for speculation drops by a huge amount. Structured scarcity, not just market opinion, will start to show up in price discovery, and adoption makes that lack even worse. XRP isn't just being saved up, it's also being used as security in cash and DeFi protocols, tokenized asset markets, and tokenizing real-world assets. When XRP is used in this way, it is briefly taken out of circulation. When institutions buy XRP and businesses use it, it effectively serves two purposes, making it a dual-purpose currency: treasury balance plus infrastructure for transactions. With the addition of RLUSD, the use of DeFi, and relationships with treasuries, Ripple has been working toward this goal. By linking company treasuries, stablecoins, and XRP, they've made a network effect that increases both adoption and liquidity at the same time. When businesses and other organizations join, XRP is more likely to be used in real life, and the network gets stronger. Take a look at the big picture now. It is no longer just a theory that institutions will start using digital assets. This is taking place with tokenized real estate, government bonds, and business debt. Franklin Templeton, BlackRock, and other big names in traditional finance are now tokenizing billions of dollars worth of assets. When you join the XRP ledger with RLUSD, you get a stable, fast, and scalable settlement layer for these tokenized assets. This demand is directly linked to XRP by Evernorth's Treasury model. This means that each institutional member controls both activity and scarcity on the blockchain at the same time. Also, the DeFi layer is important. There is no such thing as Ethereum, but XRP now offers enough liquidity, yield opportunities, and decentralized lending to draw institutional investors. XRP is used for payment and collateral, and RLUSD is used as an on-ramp. Because Evernorth is involved, these protocols have reliable liquidity, which makes other institutions more likely to accept XRP-based financial products. And then there's the multiplier for shortage. The remaining supply of XRP becomes more valuable every time it is taken out of open exchange liquidity. This can happen through Evernorth accumulation, treasury allocation, or practical use in DeFi. It's no longer just speculation that sets prices. It's permanent. XRP is ready for a completely different market dynamic because of rising adoption and usefulness and rising supply pressure. Let's look at it from a global point of view too. Ripple has been working behind the scenes with several foreign partners, such as SBI Holdings and European financial institutions, to get more capital markets to use XRP. This isn't just a US story, it's a world story. XRP sets itself up as a global bridge currency for financial institutions by giving them tools for real-time settlement, cash management, and the ability for tokenized assets to work with other currencies. Last but not least, we can't forget about the network impacts. The ecosystem gets stronger with each new institutional fund, validator, and tokenized asset project that uses XRP. There is a feedback loop when you combine scarcity, liquidity, and operational usefulness. More use, more locked XRP, more attention from institutions, and a more reliable network. This loop is exactly the kind of change to the infrastructure of the whole system that turns an asset from a speculative ticket into a basic financial tool. We can see a very clear picture when we put together Evernorth Treasury, billion-dollar buybacks, G-Treasury integration, RLUSD adoption, DeFi liquidity support, tokenized real-world assets, and institutional adoption around the world. It's no longer just a digital currency. XRP is becoming an important part of both digital banking and traditional corporate treasuries. The next step is easy to understand. Over the next 12 to 24 months, more institutional vehicles, public traded SPACs, and government programs are likely to be released. Every one of them puts pressure on liquidity, adoption, and scarcity. The stage is set for a market dynamic that has never been seen for a digital asset of this size before. That's why everything Ripple and its ecosystem partners do is important. From Evernorth to RLUSD acceptance to G-Treasury integration, there is a big change in how money moves on-chain and in the real world. It's not just news. It's now clear that XRP is more than just a digital currency. It's also becoming an important part of the infrastructure for institutional finance, decentralized finance, and tokenized assets. After Evernorth's $1 billion Treasury project, the integration of G-Treasury, and the acceptance of RLUSD, the next step is to see how these changes affect the value and possible price of XRP in the real world. Let's start with the most important things. When institutions adopt something, it causes structural demand. Every XRP held in Evernorth's Treasury, every token locked as collateral in DeFi, and every XRP used for settlement through G-Treasury lowers the amount of XRP that retail users can use. That is not guesswork. That is movement toward shortage. When acceptance and scarcity work together, they raise the value of something. Now add tokenization to the mix. A lot of traditional assets like government bonds, business debt, real estate, and derivatives are moving faster and faster onto the blockchain. From $5 billion in late 2023 to over $12 billion now, the market for tokenized assets has already grown a lot. According to estimates, it could hit as much as $1 to $4 trillion by 2030. As more tokenized assets settle through XRP-based systems, more people want the core asset. XRP isn't just a cryptocurrency asset. It's also a global settlement currency when institutional treasury amounts worth billions of dollars are added to it, along with tokenized settlements worth trillions of dollars. What this means for price is huge. Analysts and insiders like Jay Claver think that XRP will go up to $10 to $50 in the next few months, based on things like ETF approvals and corporate treasury adoption. And to go even further, XRP could reach 3 or 4 digits between 2025 and 2027 as tokenized swaps, real estate, and other real-world assets become more dependent on it. This isn't just talk. It follows naturally from the ideas of adoption, scarcity, and network usefulness put together. You can't say enough good things about RLUSD. Ripple's stablecoin XRP is becoming more popular among company treasuries, tokenized asset platforms, and DeFi protocols because it connects traditional finance to XRP. Visa pointed out that RLUSD can be useful in tokenized security pools, and big banks are starting to use it in their own operations. The use of this stablecoin increases the market for XRP. To settle or make liquidity possible, every RLUSD trade or collateral position needs XRP. Things get even more interesting now. Tokenized contracts and real-world assets on XRP make huge pools of cash available on the blockchain. As more assets are turned into tokens, more collateral and settlement systems are needed. The network effect will get bigger as more assets depend on XRP. This will make more institutions feel compelled to join. After that, XRP goes from being a speculative cryptocurrency to being an important part of the banking system. Now think about what that means for the curves of acceptance. No longer does XRP depend on store hype or short-term market cycles. Its value proposition is driven more and more by real usefulness, scarcity, and integration into institutions. When North and other similar government vehicles keep buying XRP, they are not only putting pressure on people to buy, but they are also setting up the network so that it will be used for a long time. Ripple's ecosystem approach makes XRP a currency that can be used across borders and asset classes, even at the macro level. When you put together Evernorth treasuries, the use of RLUSD, tokenized real-world assets, and company treasury integration, you get a network infrastructure that not many other digital assets can match. It's a whole ecosystem where scarcity, usefulness, and acceptance all work together. This is where price predictions start to make sense. As more people use XRP, supply decreases, and the network's usefulness grows, it's possible for the price to reach multiple digits. Analysts who say that XRP will be worth $101,000 in 5 years are not just guessing. Their calculations are based on the amount of XRP in circulation, how much is being held by institutions, and how widely the XRP system is used in the real world. Beyond that, 5-digit prices could be possible by 2030 if tokenization and DeFi merging keeps speeding up. For every trillion in tokenized assets or institutional capital flow, there is more demand for XRP, which drives up the price. This isn't science fiction. It's network dynamics and the basics of supply and demand applied to a digital product that's making a lot of people useful in the real world. XRP is now acting at the same time as a settlement layer, a collateral layer, and a liquidity point. These basics get stronger with each institutional partnership, treasury effort, or validator deployment, and the adoption cycle doesn't end with money. As tokenized assets become more common in many fields, such as real estate, derivatives, and commodities, XRP will become the standard settlement system for business and institutional transactions. With each new merger, the network becomes more useful and necessary. This is why experts are becoming more optimistic about XRP's long-term prospects. It is easy to see the return loop. Buybacks by institutions lower the supply, operational usage raises the utility, and the use of tokenized assets makes network effects stronger. When scarcity, adoption, and utility all come together, they form a self-reinforcing cycle that doesn't happen very often in traditional markets, but it's happening with XRP. XRP isn't just a cryptocurrency anymore at this point. A key part of tokenized finance, it's an asset for firm infrastructure and a global liquidity tool. Investors and institutions that see this early are setting themselves up for the next wave of uptake and changes in the market. And that's where the chance is for people who want to know exactly how the top players are getting ready for this. We made the XRP Millionaire Blueprint so that you can get in on this next phase of XRP usage. It's a full high-level guide that comes with a detailed document, an infographic, and an exclusive video walkthrough that show how the top 1% of investors are getting ready for this huge structural shift that will create wealth chances that will last for generations. You'll get a roadmap that shows you the moves that the biggest players are making. It's in the message that's been pinned below this video.